Basically, we are going to learn 2-3 things. First, in the option strategy software, we will be learning how to use the save and compare option strategy feature of the software. So this particular tool we are going to learn. So save and compare that part of the option strategy tool we will be learning today. So along with that, so that will be presented by the Prem Kumar, and along with that the intraday analysis also will do for the Nifty and Bank Nifty. Using the one standard deviation, we will be initiating certain trades. So today market is almost slightly down, and Bank Nifty is down. So this is the levels it is showing now. So that part will be Nifty and Bank Nifty analysis also will be discussed with you. And one very important concept on the advanced option segment. Advanced option segment, I again repeat, in advanced option segment, one very important concept, how to use IV rank and percentile, max pen. These are the things also will be discussed in today's session. Along with that, also one more option strategy, that is a new interface we are under the process of development and we are developing. However, that tool will not be there for the sale. So Christmas tree option strategy, how to initiate, that also will be discussed. So IV rank and IV percentile, that part Gautam will discuss, and Srikant will be joining today. He is a new entrant today, so he will be discussing about the Christmas tree option strategy. So in between, I will be coming, and if in case any queries, you can put it there. So that part I will be taking. So today's discussions has lot many topics. So 2 segments from the options we are going to learn, and one new option strategy we are going to learn. Along with that, we'll be learning or we'll be testing the efficiency of the tool on intraday. So I will be first taking this intraday analysis. So followed with we will go for save and compare option strategy. Followed with we will go for IB rank and IB percentile. Followed with we will go for the Christmas tree option strategy. So this is the things we'll be doing. So this is the thing we'll be doing, and start with, let us load the data for the Nifty. So Nifty is now 17,971 and 75, 78 level, and yesterday it has gone to 18,000 also, just touched and come back from there. Sensex also high. So all these things are there. So now it is suggesting us to buy the Nifty future at 17,994.71. So make it as 17,995. So if as per the one standard deviation principle, we are going to buy the Nifty at 17,995, then our stop loss will be 17,957, and along with the hedging we will be doing it. So what option to be hedged? Suppose if you are buying here, we must buy a 18,000 put options. We must buy a 18,000 put options to hedge our future long position. So here future has not given you the breakout. Once it gives you a breakout 17,995 above, that time we will be buying the future along with a 18,000 put option purchase to hedge the trade. So, and if in between, if the Nifty slips, Nifty future goes to 17,966. So here 17,966, we will be selling the Nifty future. Along with that, we'll be buying a 17,950 call option or 18,000 call option to hedge it. So let the Nifty future give some breakout either in the uptrend or downtrend. So we'll take a call accordingly. So this is for the Nifty future part. So here also in summary section is there. Here it says that 4 studies are neutral. 1 is for sell, buying, nothing is recommended. So all this is summary section is very important for our tool. So here all studies, Fibonacci, one standard deviation, Elliott, all these studies, what they are recommending, that also we can get. So along with that, we'll be also having a intraday top and bottom. This is also very important part to see every day. So if there is a top is happening today, then the top will be 18,113. If there is a bottom going to happen, this will be the bottom. So these two prices are valid for the day. So why this top and bottom is that much important? So once we are getting a uptrend breakout and getting couple of targets, say 18,078 has come. So hurriedly you should not come out of the trade, because today's top is 18,118. So another 30-40 points of profit you can able to generate from the same trade. So for that reason only this top and bottom is important. And once the first top gives a crossover during any volatile day, then the fifth and seventh top is also possibility. So these two things is very important. And Nifty top and bottom, monthly top and bottom has changed. As I said in the last session, so Nifty has made some high, and based on that, now the top and bottom has changed. Now Nifty top is coming 18,147 for the remaining part of August. So August we are having some near to 5 to 7 days trading days. So in that we are expecting the top of 18,147 also possible. So this earlier it was around 900 and odd. So now it has changed to 18,147. So this is also one part you need to see. Each time there is a new high is being made, so top also will change. So I'll be going for the Bank Nifty. So Bank Nifty, if we are going for the Bank Nifty, load the data. So automatically the studies will come. So I'll be going for the summary section. So Bank Nifty, 2 studies suggesting for sell, 3 are neutral. So this is the total summary section suggest. 1 standard deviation trend suggest buying above 39,659. 39,659 we should buy, and 39,484 below we should sell. And currently it is at 39,575. So Nifty has given a breakout in between our talk. So that was 75, 76 it was trading. So Nifty has given a breakout and it has 17,945 it has come. So we have been waiting for 65 level to sell, 17,965 level. So that was the level we have been waiting for sell. So sell entry is being given by the Nifty. Bank Nifty, we are expecting if it is 483 below, 39,483 below or 84 below it goes, we'll sell and we'll hedge it with an 39,500 call option purchase. Same process, if it is giving a buy entry at 39,659, we must buy Bank Nifty along with the put option. So 39,700 and put option. So there is no need to refresh the trade every 15 minutes. So once you take a reading, that reading is valid for you for the day. So that part for the Nifty and Bank Nifty you have seen. So have a look at the Gann trend reversal date. So I suppose today also there is a trend reversal date. So first session we have told which are the days the trend reversal is going to happen for the Nifty as well as Bank Nifty. So today also one of the trend reversal day. So yesterday it was a range bound day. Day for yesterday there was a uptrend day. So one trend reversal day is high angle falling on Saturday 20th. It is a holiday. So today or on Monday the trend reversal will get impacted. So today the trend reversal has to be get impacted, means market should be closing negative. Yesterday it was a slight positive, range bound positive. Before that it was a positive closing day, 100 plus point it has closed. So today our expectation will be a negative closing. Today also is a trend reversal day. So, and which other method? Price time. Price time also, price range and time also suggesting for this 19th. Hexagon also suggesting for 19th. So today 3 methods are suggesting for a trend change date, price range. So this is a major trend change date. 19th it will get impacted. Hexagon method also 19th and 20th. 20th is a holiday. So 19th is a trend reversal date. High angle also 19th is a trend reversal date. So 3 trend reversal date calculation is focusing for the day. So we may expect a positive to negative shift for the day. So that is also a very important parameter. So which is working today. So today the downtrend successibility will be more. If there is a downtrend breakout given, means that success of that downtrend will be more because of this trend reversal date action. So this is also one thing we have discussed on the first session on Gann trend reversal part. So that is impacting today. So this is the Nifty and Bank Nifty studies we have done. So now if you want to do the option trade, so here I suggest go for the option scanner. So if you go for the option scanner, so just load the data, and once the data is loaded, analyze all the strikes, all tradable strikes has come. So in a downtrend, if I want to buy the put options, so buying the put options in the downtrend, if I strikes between the sell entry and the targets, so these are the strikes is recommended today: 17,900, 17,850, 17,800 and 17,750. These 4 strikes are recommended if I am a buyer, option buyer. So if I am going to buy, I should buy the put options at 113 rupees, keep a stop loss at 88.58, and these are my targets, and these targets will hit once the underlying asset, that is Nifty spot, touches these levels. So Nifty spots, once it touches these levels, will be achieving all these targets. So you can utilize the option scanner, so that will be simplifying your option trading job in a great way. So it will filter out and tell the strikes which will suffer very less theta decay. So time decay, whichever the strike is fall, means suffering very less theta decay, so that part those strikes will be recommended. So when you should buy these options, when the Nifty spot touches 17,909. When we will sell these options, when the Nifty spots goes above 17,969.89 or 70. So if you recall, previously also sell entry was placed at 17,965 level, Nifty sell entry. So Nifty future sell entry. So here it is telling, if you are a put option buyer, we must buy only when the Nifty spot fall below 17,910. So this is very important. You cannot enter the trade as and when you wish. The price has to give you a breakout. Once the breakout comes, that time only you should enter the option buying trade. Option trade is very, very tricky and very sensitive. So here, if you wrongly enter, it will punish you very badly. So all your money will disappear with no time if you wrongly enter the option trade. So here, the underlying asset Nifty must give you a trend breakout, then only you can buy the put options. Same process if you are going to buy a call option also, you can select here and analyze. It is suggesting only 2 strikes. These strikes has to be what? When the Nifty spot is giving a breakout above 17,963. So this is the place where you can buy the call options, and these 2 strikes are recommended. These 2 strikes are only having the lesser theta decay impact. So these 2 strikes will have very less theta decay impact. So this strike 18,000 should be bought at 104, kept a stop loss of 82.660, and these are the targets. So these targets will come once the Nifty moves to these levels. Nifty spot, not future. So this is also a very handy tool you can utilize. So this tool we have been demonstrating you from the past 3 sessions. First session I have not shown you. Second, third, and today's session I have demonstrated you. So now I will be moving to Prem Kumar, who is going to discuss about the option strategy tools, save and compare option strategy. Means here we can form a option strategy, save it, and in future we can check it. Suppose today I am forming a strategy, 19th of August. After 5 days, say 24th, I want to see where my strategy is standing, at what price I have entered that strategy. So both the things I can compare. So that part, that feature of the software, Prem Kumar will be discussing with you, and so that part Prem Kumar will discuss. So over to Prem Kumar now.
Good morning, everybody. Prem here. Sir already told that I'm going to explain you about this save and compare option strategy, where we're going to look out all those things like how to form the strategy and save it. And sir, like sir told, whenever you require the strategy to be retrieved, and you can calculate the profit and loss for that. And you see where it has been standing and how it has been giving you the values and how accurate it is. Yeah, okay. I'll be just going through the demo session for you using our option strategy tool. In this option strategy, there are multiple of tools available where use an action strategy and we can backtest the strategy. In previous sessions, we have told all about this. But today we're going to see about the save and compare option strategy. So first just click on this and open. This will be the user interface of that one. In the first part where you can load the data, and after loading you can form your strategy right over here and save this one. After that, in the second part you can load that one and see how it has been working or how accurate it has been giving. Okay, first just click on the load data. Yeah, okay. After clicking the load data will be loaded. The strike price you can see right over here. This will be the future where you can buy this one lot. For example, I have been forming this strategy. Why? Because in the previous session itself, we have been discussed about the covered call strategy with wide leg spread. We have been formed the strategy. I will be just demonstrating that in the same way here.
So last session we have taken one strategy. So one strategy we have taken. So wherein he has so that is some sound issues is they're telling. So I will be just closing all these windows, so it will be little good. So here last session we have discussed about a strategy known as covered call option strategy with wide leg bear spread. So that strategy he has formed on last session, which we had last Friday, last Monday, last Friday. So now the same strategy he is going to show you. He has formed the strategy last Friday. So now with respect to what price he has formed last Friday and today what is the price, he is going to demonstrate.
Yeah, all about that sir has been said. Same way I'm going to form here. Yeah, okay. Before that, I will be just clicking on this. Just click on the whatever strategy you have been saved. All those strategies will be shown here. Just open that which we need to load. Just click on the load file. After this one, clicking on this, you can see whatever strategy you have been formed in that day. Which means I have been formed before session and Friday. At that time, the strike price was this, and I have been formed this strategy. Now it has been the strike price is different, so we can
future price.
Yeah, okay. Yeah, future price has been different. So we gonna form this strategy here and calculate the profit and loss today. And also in the same way, before session we have been formed this strategy, right? We also going to calculate the profit and loss for this one and compare how it has been goes on. Yeah, okay. Before that, we will be just forming the strategy by today. Just buy the future one lot. Along with that, just sell the call option in the money. Where I will be going with 17,950, right?
17,700. Same strategy. Go for this.
Oh, okay.
17,700 call option. Sell one lot. So whatever strategy he has formed that day. So that same party is making it here. 17,500 put option. 17,500 put option. So the predicted profit and loss and today's profit and loss will be compared. 17,500 put option that day it has been bought one lot and along with that, one put option of 17,000 was sold. So 17,000 put option was being sold on that day. So 17,000 put option, it is being sold 1 lakh. So this is the strategy he has formed on that day. So now if I can just put it any number of 3 days and just calculate it. So here it is showing some profit and loss. So we are now at 17,959. So just this particular strategy, what we found that day, if I look at here, 17,953 level. So it was telling 17,993 level, I will have 3,391 rupees profit. So I am at 17,959 level. 17,959 level. So here the strategy what I formed on that day, it has now changed and it has come to a level of 3,000 rupees profit now. So now NSC has found this strategy. Is telling that it is now the strategy which is being formed last Friday. It is at a profit of 3,000 rupees now, plus 3,000. How much was predicted? So this calculate button, if you put, the same calculation would have come. So 17,993 level, it was given a profit of 3,391. We are just 40 point below that. Our profit is only 390 rupees less. So what we wish to show here, the profit and loss which is being calculated by the software on 7 days before or 7 days before, the same profit and loss to the point with a deviation of 10 to 15 rupees has happened. So that to test whether the profit and loss projected by the software is same what you get or not, you can utilize this tool. Second benefit, once we are forming today the same strategy, if we go for the Greek analysis, prices have changed. Prices have changed, and we have to, once we go for the Greek analysis, there is a small bug, we will be fixing it up. Once we will going for the net Greek analysis here. So the Greek analysis on that day, what was the Greek was there, net delta was there. The same net delta, the net delta of this particular current strategy. So now net Greek analysis, if you can see, so here we have entered to the profit. On that day, the Greek was 1.17 delta. Now delta is almost 0. So this particular thing is also going to help you for option adjustment. If the strategy, now it is favorable, strategy gone in favor of you, so it is at a profit. So nothing adjustment is not required. If the strategy is against you, then you have to adjust or add some more lot to bring it for the 1.17 delta. So this is a advanced tool. As I said, if you do not know what is adjustment, you do not know what is option Greeks, then definitely you will be finding it difficult. So this tool has two prime purpose. One, the profit and loss which is being projected in the strategy builder software, which we have demonstrated last time. That same strategy, if you save and compare today, so you will say that whatever the projected profit and loss, whether the same projected profit and loss is delivered by the market or not. So that is the first. Second, it will also help you to form the adjustments. So that particular day, net Greek, you can see there 1.77 negative. Net Greek was there. Net delta was 1.77 negative on last Friday. Market has gone up. Now the same net Greek has come down to 0.01. So it has almost nullified 0 and you are entered to the profit. So from negative to positive you have gone. So you have made profit. So you will be learning, yes, with the strategy going from negative delta to positive delta, then in this kind of strategies can give me the profit when I am migrating from negative delta to positive delta. So that is covered call with wide leg bear spread will benefit you when you are migrating from negative delta to positive delta. So this is the migration. If you say take covered call, covered put with the wide leg bull spread opposite, instead of forming a bear spread, if you form a bull spread and a covered put, selling a future and selling a put option, that will benefit you when the strategy will move from positive delta to negative delta. So you must ask me how I will neutralize. One strategy is covered call is giving me from negative to positive profit. Another strategy is giving me from positive to negative. So if you want to form a neutral view, in Bank Nifty you can form a covered call, and in Nifty you can form a covered put. So you are neutral. So if you form in Nifty, if you are forming a covered call, and in Bank Nifty you form a covered put strategy, then you are market neutral. Any direction market goes, you will make money. So then you one leg will give money, another leg will give loss. So it will be nullified. So there you have to use your own wisdom to make such an arrangement, so which can give you better profit. So option itself is a very interesting subject. I cannot say it is a difficult subject. It is an interesting subject. You need to understand in a very simplified manner. We have a very good course in option also. So this session is only for how to use the save and compare option strategy. Now I'll be moving to Gautam, who will be explaining you one very interesting and powerful tool in our option scanner tool. So many of you will be seeing that tool, but many are not utilizing that. So that IV rank, IV percentile and max spend. So how that going to help you in the trade, that Gautam is going to explain.
Good morning all of you. This is Gautam. Today I am going to explain about IV rank, IV percentile and max spend. Generally, IV rank and IV percentile can be used to find the levels of IV relative to its historical data. IV rank helps to know whether the current IV is relatively high or low. I will explain about this in the Smart IT software. Just a minute. I will explain about this in option scanner. There we have added these features. Let me load the data first for the Nifty stock. Data is loaded successfully. Then we have to click the IV rank and percentage. Data is loading. Here we have taken the reference of 30 days, 60 days, 90 days and 1 year IV rank.
So here you are getting the parameters like 30 days IV rank and IV percentile, 60 days IV rank and IV percentile, 90 days IV rank and IV percentile, and 1 year. The formula and all you can see. So there are two numbers is visible here. So 30 days IV rank and IV percentile. So this will be useful for option traders, those are forming option strategy for monthly perspective view. Suppose you are going to form an option strategy for the month of September. So this IV rank and IV percentile will be useful for you. Suppose you are going to form an option strategy for October month, taking the only October option strikes. So this IV rank and IV percentile will be useful for you. So IV rank and IV percentile, once again I will tell you, once the contract opens, 3 months contract will be live. August month, September month, October month. If you are forming an option strategy with this August expiry, use only this one, first one. If you are using only September strike, use the second one. If you are using October strike, this is your IV rank and IV percentile. 1 year we have given for some advanced studies. Those who will go through that course, they will know how to use the 1 year IV rank and percentile. Carry on.
Let me explain about 30 days IV rank now we got 36.37, which means, just a minute, we have a 36.36, which means, so neither it is at top level or low level, but very near to that middle level of historical volatility. And we are going to see about IV percentile. It is tells us the percentage of days over the period that IV traded below the current level of IV.
So this I will explain little in detail. So IV percentile is telling that percentage of days the current year that implied volatility traded below current level. Say IV of, whenever we are talking about IV of different options are different. So you have led many strikes, all are having different IV. So if you go through that our option scanner, if I just go through here and I can go for grid scanner. So if I just go for this particular thing, you can have a look here. So bank nifty or nifty. So all options will have a different IV. You can see here. All options are having different IV. Every strike is having a different IV. So here IV rank says that on an average, what is the median IV? Out of this median IV, how many days in this month? 30 days IV rank you are seeing. 30 days IV rank you are saying. IV percentile you are seeing. Out of this 30 days IV percentile, how many days you are below the current IV? So currently, if the median IV is 18%, so think in these terms. Currently, on 19th of August, if the median IV that we will discuss in some other day. Median IV means say average IV. Average IV of a call options and put options is 18%. This IV percentile says, so today is 19th of August, so 19 days are gone, so this is 50%, means out of this 19 days, 10 days we have been below this 18% of IV. 10 days we have been above this 18% of the IV. So current IV is whatever the IV is there. Based on that, we are IV percentile says in this past 30 days period. Past 30 days means it is coming only for the August month. In August month, in this 20 days are gone, including today, 19 days are gone. In this 19 days, 50% time, and in 10 days time, we are below this current IV. So you must ask me how to use it. So if this is saying that 50 days we are below IV, so IV rank is telling it is 36%. So how we can utilize these numbers for our trade benefit? So he will tell you in the next slide.
For example, if the IV rank is 90%, then the traders implement strategies that profit from decrease in IV. If it is, I will repeat, if the IV rank is 90%, then trader implement strategies that profit from a decrease in IV. If it is a 50%, that profit from consolidation in its IV. If it is a 0%, that profit from increase in IV.
So we are now in 36%. IV rank is 36.
36%.
So can you tell me what kind of strategy we should initiate? IV rank is currently now 36%. Now, just now we have seen past 30 days period, 36% is the IV rank. What kind of strategy we should initiate to gain from, to profit from? Which kind of strategy should be? Short oriented selling of options means it is a decrease in implied volatility should gain us. If it is a 50%, IV rank is 50% near, then consolidation type of strategy we can form. short straddle, short strangle. So this kind of strategies we can form. Short butterfly, short Christmas tree. Those strategies we can form. Consolidations. So if it is 0% near to zero, absolutely it will not be zero. 1, 2, 3, 4, or you can say 25 grains. We can buy long straddle, long straddle, long strangle, long butterfly, long Christmas tree. This kind of strategy we can form. So if consolidation we want to make means, what kind of strategy we should form? Calendar spread we can form, short straddle we can form, short strangle we can form, so now 36. So 36 means we are into the consolidation band. So we are into the consolidation band. 36% of IV rank. IV rank is 36%. IV percentile is telling 50-50. 50% of time we are below this IV and 50% of time we are above this IV. So we are into the consolidation band. So consolidation band means we will be forming the strategies like short straddle, short strangle, calendar spread, debit calendar, not credit calendar. Debit calendar spread, we can form short butterfly, short Christmas tree. These are the strategies are beneficial for not only for this month, it is for 60 days and 90 days, for September and for October also. For September and for October also, we are having what kind of strategy? Consolidation oriented strategy. So IV rank and IV percentile is suggesting this. IV rank is for August it is 36, September 18 and October 15. So this is what it is telling. However, September and October is still long way to go because IV percentile is 25% and 16%. So that time we can think of forming specific law, but IV rank if you are following. So based on that, current situation suggests that we are into a consolidation market. So repeat that same stage once more. Same.
Yeah. No.
This
For example, if the IV rank is 90%, then traders implement strategies that profit from a decrease in implied volatility. If it is the 50%, then the trader implements strategies that profit from a consolidation in IV. If it is a 0%, that profit from increase in implied volatility.
Whether all of you have got by looking at IV rank which kind of strategy to be initiated, whether all of you have understood this? Whether all of you have understood this or anyone have any query? Put call ratio study, your open interest study, those are all age old concepts. IV rank, IV percentiles are forward indicators. IV rank and IV percentiles are forward indicators and they are very powerful, more than 1,000 times powerful than your option chain study. So you can look into this part and take appropriate call whether to go with the long straddles, long strangles, or go with the long short straddles and the short strangles. This will give you a very on-hand information on that. So this is very important to see that. So now next is he is going to take for the max pen. All of you will be dreaming always that where the Nifty is going to expire.
We have a max pen. Max pen or the max pen price is the strike price with the most open call and put contract. It will cause in financial loss for the option traders,
option buyers
at expiration. Let me
so that is nothing but the strike at which we are expecting the expiry to happen.
So this feature we have added in the same option scanner tool.
Both monthly and weekly.
For monthly expiry and weekly expiry. Let me load the data. Data is loaded successfully, and we have to click the find max pen. This is for the monthly expiry. So here the expiry will be happen very near to this max pain value.
17,900.
For the same, you can see for the weekly expiry, which is also telling that 17,900.
So this is a week which is having weekly and monthly expiry, both are same. Where 25th of August is the weekly expiry and monthly expiry. Both are same. So for that, what we are getting now, max pain is 17,900. It will change. So every day keep checking it. So currently it is telling that 17,900 is the max pain. So expiry is going to happen just around this 17,000, some 10 point, 15 point up or down, or exactly at that. Just highly 10 or 15 point up or down, it will happen maximum. So what you should do? If it is expiry is 25th August, it is going to happen at 17,900. So what we should do? Please tell me quickly. If 17,900 we are going to have a expiry on 25th of August, then what we should do? Now we have seen IV rank and IV percentile. There I told you short straddles, short strangles are beneficial. Now Max Pen saying that 17,900 is going to be the max pen. There the expiry is going to happen. So what strategy we should initiate? Ashish ji is telling that selling a 18,000 call option. Excellent idea, Ashish ji. If it is selling a call option, but you must hedge it, because selling one call option will attract a huge margin. Try to hedge it with some out of money call option also. Selling only, it will attract a huge margin. So if you are selling, hedge it with 18,100, 18,200 call option. So you can form short straddle, you can form short strangle. So this kind of things you can do, or you can have a one more interesting strategy is there, conversion. Conversion strategy is one more very interesting strategy is there. Those who are having my book on futures and option, conversion strategy means buying a future, along with that sell a call option and sell a put option. Sell a put options. So both you can sell. So conversion strategy also is highly beneficial at this point of time. So you can conversion strategy should be initiated one day before the expiry or on the day of expiry. You can initiate and the same day you can close it up around 3:30. So this is also a best strategy you can initiate at this point of time. Trendy job, we are buying a future. So sell a call option and sell a put option. If you want, you can further slightly hedge it with a buying of one put options. Slightly you can do it. But conversion strategy also best suitable at this point of time. So you have understood these two things. Now Srikant will explain you about a famous strategy and very important strategy, Christmas tree option strategy. Christmas tree option strategy. So Srikant is going to explain you that. So this is the strategy. So now over to Srikant.
Hello traders. So this is a Christmas tree option strategy. So these are of two types: short Christmas tree option strategy, and then second one is long Christmas tree option strategy.
I think.
So we're gonna see today long Christmas tree option strategy. So in this we want to make 6 trades. So in the call option 3 trades and the put option 3 trades. So in the call option, sell one lot, and then second trade is buying the 3 lots, and the third trade is selling the 2 lots. So same as a call option in the put option also, selling 1 lot and then buying 3 lots and selling 2 lots. So these 6 trades should be making, and then
depth between the strike you can tell 100, 200, anything.
Yeah. So there's a depth where we should be choosing it. So with that only we will be making these trades. So from 100 depth value to the till 2500 depth value. So we're gonna see the first point from the software.
So now in the software, he will show you all these things. So just have a look here.
Yeah. So here first you should choose the from date. So I'm choosing August 1st, and then to date I'm choosing August 12th, and then the expiry 25th August. Depth I'm choosing the value 500, and then I'm so with these three things from the to date, expiry, depth, we're gonna calculate the profit loss. So
We are going to form the strategy as well as to calculate the profit and loss.
yeah, so here we can see the call profit loss, call option profit loss. So with the depth value we chosen 500. So we can see the first strike 17,300. The selling one lot in that first trade. Second trade, the 500 depth increased because of the call option. So strike to 17,800, buying the three lots. Next, strike 3, 18,300, selling the two lots.
So here what he is telling, the Christmas tree option strategy having 6 trades. So this is a advanced edition of your butterfly strategy. So what we are doing here, 3 trades in call option it has to be entered, and 3 trades in the put option has to be entered. So now the system is making a choice. Wherever the Nifty is there, Nifty is on 1st of August or 2nd of August, Nifty is around 17,300. So it is selling a 17,300 call option. 500 depth we have taken, so plus 500 it is adding. So choosing the next strike, 17,800 call option, buying 3 lots, and along with that again it is selling 2 lots of call option at a 500 depth, means plus 500, 18,300. So this call part is over. So this particular strategy is being formed on the 1st of August. 1st of August.
Yeah.
1st of August, and from 2nd of August till the holding day, 12th of August, the profit and loss is being calculated, and it is showing every day it is a loss. Every day it is a loss, it is showing. So same process, if it is going to for the
Put option.
put options.
So we'll see same as the put option. So the depth will be decreased 500. So starting strike is 17,300. So first trade in the put option, and then
So minus 500.
Yeah, minus 500. So it is 16,800, and then minus 500. 6th trade is 16,300. Strike 3. So with this, the put option, we have been traded, and so with the 6 trades in the put option we have got the profit loss, and then this is actually ranging from the
2nd
date
August
2nd
to
August to
12th August. So now for the sum of all these things, because this trade call and put together can form the Christmas tree strategy. So call combinations, whatever profit loss is coming, put combination, what is the profit loss is coming. So this is the net profit and loss has come. So here you must say this thing, that this particular strategy we have formed, it is giving us the losses. So it is giving us the losses. So we have formed with a depth of 500 points. So this particular strategy can be formed with a 100-point depth, can be formed with a 200-point depth, can be formed with a 300-point depth. So any depth I can form. Whether all depth have given me loss, or there is a secret depth is sitting somewhere which is giving me the profit. So we have seen in the 500-point depth, it has given us the losses. So here we have given the most important part of our things, depth-wise profit and loss count. So if this strategy like you have formed in 17,300 call we sold, we bought 17,800 call, and we have also 18,300 call also we sold. This is the thing we have demonstrated here. Suppose if you are forming at 100 point depth, it will be 17,300 call sell, 17,400 call buy, that too also 3 lots, and 17,500 call, it should be sell 2 lots. So different depth we can form the same strategy. 50 point depth, 100 point depth, 200 point depth. So here we have given the most important feature to find out which depth has given the profits and which depth has given the losses. So if you click here, you'll be finding out here the 100 depth out of these 12 trading holding days from 1st of August to 12th of August, 100 depth has given resulted profit in 8 days, 8 subsequent days. 200 depth also given profit. 300 depth also given profit. 400 depth also given profit. But once it is crossing 400 point depth, none of the points has given profit. Every day it has given a loss. And beyond this, you can say 1,000 point and all, there is strikes are not available for trade. So we can form the strategy till 800 point of depth. However, out of this, the 100, 200, 300, 400 depth only can give you the profit. Other depths will not give you the profit, it will give you the losses. So here, what we wish to convey here, strategies should not be blamed for the profit and loss. Our implementation style should be blamed for the profit and loss. The same strategy, if it is being formed with 100 point depth, 100 point depth, it will result in profit. And same strategy, if it is being formed with 500 point depth, it will give you the losses. Have a look at 100 point depth. If the same strategy is being formed with 100 point depth on 1st of August, by 12th of August, every day it has given the profit. Every day. 5,000 highest and the lowest has gone to 3,600. Every day it has given the profit. However, same result you will get in the 200 point depth also you can show. So 200 point depth also you can have a look here. So it can scan and tell you which depth is appropriate to form this strategy. So this strategy you can have a look here. 200 point depth also given a great profit, 5,000 to 4,500 range. However, whenever we are going beyond 500 point, it has given the losses. So here you can see that. So 200 point also we have seen. So similar way you can see this is for 200 points. So this conveys us every strategy can be turned to a profitable trade if it is implemented properly. So you must ask me how I will know that which depth I have to initiate the strategy, how I should initiate these strategies to make it profitable. I have shown you same Christmas tree strategy. If you formed with 500 point depth, you are at loss. If you form at 100 point depth, you are profit. 200 point depth, you are profit. 300 point depth, you are profit. So whether this same style is repeating every month, every year? No. So that also depend upon the market's conditions or volatility situation. So to test that, what is required? First, you need to understand that strategy. You need to learn that strategy, and then you have to backtest this strategy with some valid tool, the way we have shown you here. So similar tools is there, but this tool is not for sale. So this tool, we have similar applications we have developed for our in-house use. This is not for sale. So this is only for our portfolio management. We are using this particular tools. So here, this way if you can analyze, but those who are the buyer of the software, they have the tool called backtesting of this tool. So here you have backtesting tool. Where it is? Not there. This
Advanced option strategy testing tool.
advanced option strategy testing tool. We have given this tool for testing the things. So here what is very important, learn the strategy, number one. Second, to make the strategies profitable, the same strategy profitable, you have to simulate and you have to understand how it should be formed, at what gap or what depth to make it profitable. Every strategy can become profitable if you implement it properly. So this is one example I have shown you, the profitability of Christmas tree. Similar way, I have already told you how to make profit from your calendar spread. The spread should be 65 point average. You should get a net debit of 65 point average. That will make it profitable. Same way I have told you, whenever you are forming the box spread, the spread or the net credit should be 80% of your spread difference. So from where all these things comes? Those who have gone through the 40 hours of futures and option course, which is being moduled in this order, so near to 40 to 45 hours of futures and option course. So those people know how to form a strategy. So these are the very important part. One example I have shown you in the Christmas tree option strategy. Christmas tree option strategy, you have seen one example only. 500 point we are forming this strategy, we will get nothing, zero, loss. If the same strategy can be initiated with 100 to 400 depth, then we will be definitely at profit. So those things you learn in the Smart Finance Futures and Option course. So why I am telling this? You need a valid knowledge. You don't require a knowledge which is theoretically true and practically wrong. So these are the things will not work out in the stock market. Stock market, you require a knowledge which will be proving itself with proper logic. Just by watching the TV screens, you can't become a successful trader. Just because reading some theoretical books which has zero practical relevance, you can't become a stock market trader. Just by knowing the IV rank and IV percentile formula, IV rank and IV percentile formula or max spin formula, you can't become a successful option trader. You must know how to apply this. What is all of you are telling, can anyone will tell me where is the expiry is going to happen on 25th? All are going to tell that. All of you have that question. How to calculate it? Max pen, there is the method is already there. Max pen. All of you are very, you can say, charged towards doing the option trade. But which strike option to buy? Which strike option to sell in intraday? That is the most puzzling area. So that should be successfully through some methods, some mathematical valid methods, it should come to you. Then only you can become successful. So if you are an interested participant and wants to do good option trades, if you have already procured this futures and option course, please go through that course time and again. Read through that. It is an audio-visual presentations. All clues and secrets of making profit in the option strategy is being given there. Only thing, sincerely you have to study and implement it. So that is what is required. So that is the example through this Christmas tree strategy. I have shown you that. So which strike, depth wise, you are seeing that which strikes are going to give you the profit and which strikes are giving you the losses. So that you have seen. 100 depth, the same strategy is profitable. 500 depth, the same strategy is making loss. So you can say, like food can give you the energy, overeating also can causes death. Food can give you the energy, but overeating will cause death. So weekly levels also is highly successful. So how to generate the weekly levels or 7 days level? Today is Friday. If you are having the software, how you can use the weekly levels? Can anyone create some software or smart ID software? if you want to initiate the weekly trading level, means coming week from Monday to Thursday, if that trading levels, if you want to generate post market hour, very carefully listen to this, post market hour, load the data, and post market hour, post 3:30, use the positional feature here, use number of days as 7, use calculate. So this will give you the weekly level of Bank Nifty from the next Monday to Thursday. Thursday we are having expire. This is for Nifty. But it must be done post market hour. These levels are not true. Yes, wherever the closing will happen, 3:30 after, that levels will be generated. So this weekly levels, those who are not having time to do the intraday trade, if you can take these weekly levels, you will also become highly successful. So those levels you should preserve, keep it, and once you calculate and keep it, then next onwards, only next week, once you get a breakout, you can so 7 days. So here all these calculations has done. So for next week we are expecting these levels. However, these levels will change based on the 3:30 factor. So 3:30, wherever the Nifty is changing, so based on that it will also change. So here all these things you have seen, and whatever the Christmas tree strategy, IV rank and IV percentile, all things was discussed, that I am going to put it in a handout section. Nifty, we have earned a couple of points, and in the Bank Nifty, we are waiting for the breakout to happen. So this is what we have achieved till this point, and so you can say till 40. So here 17,940 it has come. Our calculations point was, this is the reversal zone. So 65, when we did the calculation, so it was 17,972 level Nifty was there. 66 level breakout given. However, it has a reversals from here. Reversal from here. However, so other it has. If you want this documents, just WhatsApp at 99411 So I will be sharing those documents with you. I will be sharing those documents. IV rank and IV percentile and max pen, how to use it in option strategy tool, how to save and compare option strategy to know the projected or predicted profit and loss has worked or not. Number 3, you have learned how to form a Christmas tree option strategy and which depth is appropriate to make profit. And number 4, you learned how to do intraday trade in the Nifty and Bank Nifty along with the hedgings. And Nifty, we got a grade of 20 to 30 points of profit. Bank Nifty, we have not got the breakout till now. And also I have shown you how you can select the correct strike options to buy in intraday trade. So these are the content of this today's lesson. It has been taken. So recordings will be put in our YouTube channel. You can view that. This offer is already, we have removed from our site. As a webinar participants, it is still open for you. So if you want, you can avail that. So that link also I have shared in your chat box. So this is all about today's lesson.